to Business Talk here on Business Tech with me, Michael Avery, a fresh take on business and life during lockdown and how some of the country's leading companies and business leaders are adapting to operating under the cloud of the pandemic and also looking at and thinking through the contours of the next normal. How are they going to lead the people and the organizations that they lead through the next 12 months as the world races to find a vaccine? And what are the various scenarios that could possibly unfold? Well, we know before the COVID-19 pandemic struck, South Africa's banking sector was already dealing with an ongoing economic recession. We had the ratings downgrade. Things are now looking decidedly worse from a fiscal position. My next guest has just finished leading his business through a brand refresh, but it's still all about traditional values and innovative thinking. James Formby, CEO of R&B. Welcome to the show, James.
Yes, thank you very much, Michael. Hello and welcome hi to the listeners.
Now, what has been the biggest impact as you look now over the last 8 months since we went into lockdown that COVID-19 and this general pandemic has had on R&B?
Yeah, I guess a lot has changed, and I suppose one of the themes in reflecting on the months gone by, one of the most sort of prominent themes, I think, is resilience. How people have responded and coped and dealt with an amazing amount of change in a short space of time. And the reality is that we literally went from within under a week from having everyone working as normal in the office to down to 10%, and it's creeping back now. But we adapted payments, settlements, trades, everything carried on as per normal throughout this time in a completely new environment. And I think it's amazing how people responded to make that happen.
I think the resilience of individuals and of teams has been the one big lesson that all the executives I've been chatting to have taken away from this. No matter the size of their organizations, be it huge tankers that have needed to turn or smaller speedboats, they've all been remarkably flexible. What are the lessons that you've taken from this pandemic that you believe are going to help R&B into the future?
Yeah, so I think when it comes to our own business strategy, this has accentuated a number of key strategies that we were already experiencing. So, I guess digitization and how banking has become more digital has been a trend that's been going on for years. The use of data to help our clients, to help us, react fast. That's been a trend that's, happened for some time, but certainly got accentuated by the pandemic because now, we really needed to or do this just much faster than we did before. So a lot of sort of key themes, as we look, instead of, thinking about COVID, we're really thinking about our business and how we're going to grow it in a new low growth environment, which we see for a number of years. Finding those growth niches, which I think there are, and at the same time, making sure that we remain lean, we remain agile, so that we can respond quickly to client requests, whatever they may be, markets or lending or advice.
I think if you look at banking broadly as a category, what we've seen over the last couple of weeks is that the market had been pricing the absolute worst case scenario into our banks. And it started to emerge through some of the trading updates that IFRS has meant that you had to be very conservative with your provisioning for bad debts. It's probably not panning out quite as bad as that. How do you see banks successfully emerging from COVID-19? And what do you see banking looking like after the pandemic?
Yeah, I guess your point on IFRS 9, we've all become experts on IFRS 9 as a consequence, and it's accentuated the volatility of bank earnings. I think banks in the past have always been relatively sort of stable earnings producers, and this particular accounting statement has dramatically changed this, because we now have to look forward and try and predict the future and provide against our existing book accordingly. And that's across the industry, you've seen, as you mentioned, the impact that it's had. I think it's important for us that the accountants don't drive the way we think about our business. Whether the provision is X or Y, it doesn't really ultimately impact what we do. I mean, the first and principal role that we play is as a store of the country's deposits, and then also to oil the wheels of the economy through capital, be it for growth, for infrastructure, for working capital. And so, the fact that there's a lot of volatility in provisioning isn't distracting us from saying, well, we're going to continue. In fact, we're looking at our risk appetite and saying, well, where can we enhance it? How can we make sure that, we're able to deliver? So, Michael, we're very much open for business in, what's going to be still a tough environment. We still very comfortable that we can serve our clients.
On that point of looking for opportunities, if we are to really look for those flywheels that can start to generate growth again, public-private partnerships have to be at the center of government's thinking. Are you confident in the macro outlook for South Africa? Where do you see these green shoots coming from?
So I guess there's two different questions in there. The one is around green shoots and the one is around confidence. Michael, I think, and many people have sounded this warning, the government's fiscal trajectory is not sustainable. And, we are, as an institution, but also as a major player in the South African economy, deeply concerned about the outlook on government borrowing. This has a whole lot of negative consequences. I mean, the first one is the potential for further rating downgrades as a country. Remember that we were investment grade only by one rating agency in March. We could move through the entire double B rating category and move into single B, if we continue with this trajectory. And there is a real risk of that. So it is absolutely imperative that when your income drops as a country, you have to cut your spending accordingly. And we're worried that the government is going to struggle to make this adjustment, and the kind of fiscal deficits which even by the medium-term budget policy statement are running at 9%. I mean, that's more than double where we were before COVID. And this isn't a short-term projection. This is more than double over the full forecast horizon. So we are very worried about the fiscal outlook for South Africa, and I think all South Africans should be. And we need to, the government needs to do what it can to bring spending under control. There's simply no alternative. I think you also talked about green shoots, and in terms of the positive side, the opportunity to accelerate growth through infrastructure investment is real, provided the government doesn't try to do it by taking on more debt. There is capital available in the private sector, both in the banking system and in the long-term savings industry, and there is this ability to use and leverage that capital to grow infrastructure. And it's very encouraging to see some of the projects are starting to come to market. The emergency energy procurement, the renewable energy programs, and then a list of longer-term projects which can make a difference. And if these are done correctly, we can see a positive impact coming from these. It's hard to estimate, but I mean, after a little bit of a rebound next year, probably in 22, we're looking back to the sort of 1.5% growth levels. But if all of these come together, perhaps they can help the economy, add that extra 0.5%, which is very meaningful in our context.
Absolutely, and the President did mention in his first State of the Nation address, one of his goals was to get growth back up above population growth rates of around 1.7%. And we seem to have just ground down to the structural below population growth rate, which is part of the reason we find ourselves in this fiscal bind. And clearly, government now needs to demonstrate a bold leadership when it comes to reining in expenditure. On the public sector wage bill, for example, I think the market's going to be very keenly watching those negotiations to see whether or not the political capital is there as well. If we zoom out of the macro in South Africa, for example, you're a management team, you've got to manage what you see before you. There's certain things that are beyond your control. And digitization is one of those things that I think all banks are thinking about and have been for some time. Banks, in effect, are almost like platform companies. You've got big networks. How are you approaching digitization and digitalization inside RMB? And have you seen COVID accelerate this journey?
Yeah, I think it's not, obviously our clients have always interacted with us both digitally and face-to-face. Obviously as a very high sort of expertise-driven organization, we have we have a lot of direct engagement with clients, and then clearly a lot of digital engagements through various channels. And I think we're definitely accelerating that. I suppose in some of the focus areas, the first is to put more and more on our digital channels so that our clients can do more and more without having to phone us or chat to us. This speaks to simple things like self-service, account maintenance, things like permissions and mandates. There's lots of detail there that, still our clients call us to do. So we assist them as opposed to them doing it themselves. And so there's a big theme to move some of that so that our clients can actually do it themselves. We've all got used to doing it, through retail platforms, and our clients are actually quite happy to do a lot of that. Michael, the other sort of topic is to make as much of what we do straight through, so that there's no human intervention through multiple different dimensions of a transaction. And remember, transactions flow through multiple systems, if a lending transaction or a payment, to make sure that those seamlessly work through our systems right from initiation right through to when it hits our general ledger, at the back end. So a lot of deep thought about how we use that, and also use the data that creates, because we actually have a fantastic array of data across corporate South Africa, but obviously with FNB through commercial and through retail South Africa. So we've got incredible insight as to what's actually happening day to day, by very specific geographies, different types of clients. We can actually see it all, and it's hugely valuable to us as an organization, and also to our clients.
Yeah, as we know, data is, as they say, the new gold or the new oil that's there to be mined. And with that data in hand, what sort of behavioral changes have you seen from your clients post-lockdown?
Yeah, so I think our clients went into an emergency mode. When lockdown first happened, people didn't know what it would mean. They had to draw on liquidity just to have it in case they really didn't know what was going to happen. And we've now, I guess, into a stabilization phase, I would call it, where our clients now have a little bit more visibility. I think we know that, there may be some restrictions going forward, but less so. The economy is opening up. We're seeing across many sectors that actually things are looking better than they did a year ago now. And we can track this very, very specifically. I guess that so some sectors are actually now looking forward, looking positive, and then clearly the leisure space and the related travel space are two parts of our economy that are still very much impacted by COVID, and I think the reality is likely to remain so. So for most of our clients, we're seeing business slowly return to normal. And then for some sort of sectors that are deeply impacted, we're seeing them go into quite a severe sort of preservation mode in order to get through this tough time and wait for us all to get back to eating and traveling as we did before.
And I think, related to that, as part of the broader FirstRand group, we did see Outface at least take a principled position on playing out business interruption insurance in the hospitality, travel and tourism space. And it is an area that's being litigated all over the world, business interruption insurance policies. But that certainly stood out through this COVID period. Now, the media has been reporting a migration of skilled and wealthy South Africans abroad for the last several years. I think largely thanks to the Zuma years and the lost decade to state capture and all of the corruption. Then Eskom, there was a general malaise and hopelessness. Have you seen an impact in terms of COVID maybe just slowing this down because people can't travel, and potentially around these green shoots and these pockets of hope thanks to the new administration? And it does look like there's a real commitment now to rooting out corruption.
Yeah, I must say, Michael, I think this is a massive risk area for South Africa in general. And I'm not talking only about the banking industry. The banking industry, as an example, is really comprised of a lot of very deep and specialist skills. The same could be said for the legal industry, for our medical industry. And these deeply specialized skills are actually very attractive to other countries. And we are seeing some countries target South Africans quite specifically, particularly, I would say, in the 35 to 45 age category, which is a worry, because that's the type of age where people are becoming very valuable to this country and this economy, and we lose them. So personally, I see this as a major concern. I think that clearly, practically, people have found it harder to emigrate, and maybe the economic pressures in other markets will slow those job opportunities. But we are still seeing it, maybe a little bit more slowly. And I do worry that as things normalize, we will continue to lose some of those skills. And so I think it's important for us as a country to think about the value proposition that South Africa offers skilled people. Clearly we shouldn't try to tax more and more and more, because people will go to other jurisdictions. But we also need to be attractive to incoming skills, because there are many people who would come to work in South Africa, these kind of specialists. And practically it's very hard to bring specialist skills into this country too. And they don't displace other people, they actually add to our economy ultimately.
Yeah, visa reforms are making it easy for those skills to come in. Ricardo Hausman often talks about the need to have the know-how to develop as an economy. Your human capital is one of the foundational elements that are required, and very distressing to see that we are losing and eroding part of that the particular base of skilled capital, human capital in the country. Just as we end off the conversation, James, it's been fascinating. The 20 minutes that we've had so far have just flown by. What can we expect from R&B next year? Are you looking at acquisitions, consolidation, new markets? What can we expect from you?
So, Michael, we're very happy with the portfolio of business that we have. I guess it's a combination of transacting with our clients, lending, advising, and then there's a markets component, risk mitigation and flows. And so these are our core skills. We're not planning to add to the broad categories, but we continually find innovation, product innovation in these subcategories. We're also relatively comfortable with our portfolio. We obviously operate predominantly from South Africa, but our rest of Africa portfolio has been growing very consistently over many years now, and sort of in the mid to late teens annually. I think COVID has obviously put a bit of a brake on that temporarily, but we will see that growth in the rest of Africa will also return, perhaps a little bit more slowly. So for now, we're not planning any fireworks. It's about back to good old business, making sure that we're relevant for our clients. And as they stabilize and look forward, we'll be alongside them to grow. We're going to focus a lot on trying to, as we discussed earlier, help on the infrastructure side, because I think that's key. And then we also play a key role in intermediating investment in and out of South Africa and the African continent. And we'll continually, our markets business has been growing strongly, and we will continue to invest in it to make sure that we can sustain that.
I think a very powerful message for your clients in a very difficult operating environment for everyone at the moment. James, thanks so much for sharing your time with us here on Business Talk.
Thanks very much. Keep well. Thanks, Michael.
That was James Formby, CEO of R&B, with how he's managed to navigate the pandemic storm here on Business Talk on Business Tech with me, Michael Avery.